the BullHorn. Forgive me for going all Richard Nixon on you, but Yahoo shareholders won't have Carol Bartz to kick around anymore, joining me to discuss Yahoo and other things. Bill Perlman from StockTwits.
Paul, pleasure.
Bartz is out. Not a huge surprise, even though she had a little bit of time left before her contract officially ran out. What's your take on what's next for Yahoo?
Huge problem there from the top down. In the middle, there's problem. Middle management, there's problem. They've not been functioning like a great company does. Somebody on the StockTwits stream pointed out that, number one, held on to Bartz too long, and number two, didn't watch the Alibaba situation close enough.
Yeah, I mean, China's Alibaba, a big frenemy, if you will, of Yahoo, and that clearly, I think, was probably the biggest role in leading to Bartz's ousters. Bartz definitely didn't exactly handle that relationship all that well, to put it mildly.
Well, you know what? There's a huge potential there that people do not talk about that much. And that is that it has huge traffic.
Yep.
Second most traffic site in the world behind Google, and it really hasn't lost that much traffic, even while not being managed well. So there's huge potential there. It's just monetizing that. My personal preference is Dennis Crowley from Foursquare. And it is interesting because what would happen there is that he would come in, and again, I think it's a long shot that something like this would happen, but they do need something bold, is that he would come in and he would socialize the entire site. And that would make it more sticky, that would keep people on the site longer.
To turn to another topic, we originally were going to discuss the notion of winning stocks in a losing tape before Yahoo pulled the axe out and chopped off the head of Carol Bartz, or as I not so fondly referred to her in a column a few months ago, the big purple dinosaur. Moving on, what have you been noticing with winning stocks in a losing tape? Howard actually tweeted about how two gun makers in this market, Sturm Ruger is doing well, Smith & Wesson is not. It's proof positive that don't buy sectors, buy winning leading stocks.
We know ETFs have become so popular, and we had a period for an extended period of time where it was a beta market, where everything was performing like the market. Right now, what you're finding, especially with this pullback, separating the wheat from the chaff.
Yep.
So a company like Sturm Ruger, who is executing extremely well, is making all-time highs up until last week.
Right.
And you're also seeing a similar phenomenon occur with the mining stocks.
Right.
Gold outperformed like crazy this year, last year, and the miners were lagging horribly. Now what you're seeing is a few of them in the royalty company like Royalty Gold beginning to outperform, seeing lower oil prices with the higher price for the metal. The potential there is better margins. So that's a trade that's on. Even some of the most savvy guys on StockTwits are even playing that as a spread trade.
Right.